Seller financing. What is that exactly?
It's kind of just what it sounds like, honestly. The seller of the house becomes the lender. Good afternoon, and welcome to Foundation of Profits, a podcast where we will go deeper into the real estate business with the help of expert companies such as Tantum Developers, your one-stop shop for real estate.
I'm Jake Thompson.
And I'm Sophia Martinez.
So today we're going to be diving deep into the world of real estate financing. You know, everyone thinks you just get that 30-year fixed-rate mortgage and that's it.
Mm.
But we've got a ton of info here that says it's way more than that.
Oh, yeah.
So, what's the real deal here? What are we really looking at when it comes to financing these days?
It's way more diverse than people think, that's for sure. It's almost like, imagine trying to climb a real estate ladder. Like, you wouldn't use a step ladder to climb a skyscraper, right?
Right.
Each kind of step in your property journey might need a different tool, different financing. So we've got everything from those classic bank loans all the way to strategies that totally skip the banks altogether.
Okay, so different tools for different stages of your real estate journey. I like that analogy. So let's start with those first few rungs. We're all familiar with those conventional mortgages.
Yeah, those are usually how people kind of dip their toes into the market. You've got your fixed rate mortgages. Those are all about stability. The interest rate stays the same for the life of the loan. But then you've got those adjustable rate mortgages, those ARMs, and those can be a little, well, unpredictable.
ARMs, those are the ones where the interest rate can change,
Yeah.
right? So what is it that makes those appealing?
Well, you might snag a lower rate at the beginning compared to a fixed rate mortgage, which can be tempting.
Oh, absolutely. Especially for a first-time home buyer, that could make a big difference.
Exactly. But, and this is a big but, ARMs adjust to what the market's doing. So that low rate might be great now, but could jump way up later. Imagine you finally qualify for that dream home, payments are doable.
Right. You're just getting comfortable and then...
Exactly. Suddenly, those payments skyrocket because the rate adjusted. That's the gamble with ARMs.
It's a balancing act, for sure, weighing the what ifs.
Yeah.
And what about those jumbo loans? I know we see those a lot in the documents. Are those for, when you're further up that real estate ladder you were talking about?
Exactly. Those are for the big leagues, the higher-priced properties.
Wow.
If you're after that multi-million-dollar listing, you're going to need a jumbo loan.
Okay, so bigger property equals bigger loan. Makes sense.
Yeah.
But not everyone's shooting for a mansion, right? There are a lot of people out there who just want a comfortable place to call their own. That's where these government-backed loans come in, like the FHA, VA, and USDA loans. It seems like those play a big role for certain buyers, right?
Oh, absolutely. Those loans are designed to make homeownership a reality for folks who might not qualify otherwise.
Right.
Take VA loans. They often have no down payment required for veterans and active military personnel.
Wow, 0 down.
Yep. Being able to buy a home without a huge chunk of cash up front, that's been life-changing for so many people who served our country.
That's incredible to go from serving to owning a piece of the place you served. It's amazing. What about FHA and USDA loans? What makes them stand out?
So FHA loans are perfect for first-time buyers or if your credit score isn't the best. They often need a smaller down payment, sometimes as little as 3.5%. That can be a game changer for folks who thought they couldn't afford to buy.
So it's like that extra boost to get your foot in the door of homeownership. And USDA loans, those are tied to where you live, correct?
You got it. USDA loans are specifically for homes out in rural areas. Location, location, location. It makes a difference even in financing. These loans are usually more flexible with credit requirements and sometimes even offer no down payment options. It all depends on your income and stuff. But the main thing is they're a great way to help out those rural communities.
It's amazing how each of these government-backed loans caters to such different needs and situations. It's really about helping as many people achieve that goal of owning a home as possible. But what about for folks who don't quite fit those categories or are just looking for something a little more adventurous?
Oh, you mean like ditching the traditional route altogether?
Exactly. That's where things get really interesting, wouldn't you say?
Adventurous is one way to put it. We've been talking about climbing the ladder of traditional financing, right? But some people, they're ready to scale the whole wall. That's where things like seller financing and lease-to-own agreements come in. We're going to delve into right after we hear from our sponsors.
Tantum, your one-stop shop for real estate. From idea to reality, we handle it all. Check out our services at tantumdev.com.
Okay, so we're going off the beaten path a bit now. Seller financing. What is that exactly?
It's kind of just what it sounds like, honestly. The seller of the house becomes the lender. So instead of dealing with a bank, you're making payments straight to the person you bought the house from. A lot of times you can work out the terms together.
So it's like cutting out the middleman entirely. Interesting. When would someone choose that route, though?
Well, say you're a buyer, but you don't really check all the boxes for a regular mortgage, right?
Okay.
Maybe your credit score isn't amazing, or you're self-employed and your income is all over the place. Seller financing can be a way to make it work.
I see. So it opens up possibilities for people who might not fit the mold, but there's some things to watch out for, I'm guessing.
Oh, for sure. This is where you got to do your homework. You really need a lawyer to look over everything.
Right. Always get that legal advice.
You want to make sure it's all spelled out clearly. The interest rate, how long the loan is for, are there any penalties if you miss a payment, all that jazz.
Smart. It's a big decision. Got to be careful. Okay, now lease to own. I've always wondered about those. How do those work?
It's like a try before you buy kind of deal, but for a house. So you lease the property from the owner, but the lease comes with a special option. You get the chance to buy the place later on. And usually the price is already decided at the beginning.
So you're renting, but also working towards owning it at the same time? That's pretty cool.
Yeah. It's a good stepping stone if you need to improve your credit score, maybe save up for a bigger down payment, or just like dip your toes into home ownership before diving in head first.
That makes a lot of sense. These alternative options are giving me all sorts of ideas. Now, we also have some stuff here on hard money loans and private money loans. Those sound a little more, I don't know, intense.
Yeah, you could say that. Those are more for like experienced investors, or if you need cash fast, they're definitely higher risk, but the rewards can be higher too. Think of it like climbing higher on that wall, a little scarier, but the view from the top is better.
I like that analogy. So break it down for me. What makes hard money loans different from the traditional ones?
Well, hard money lenders, they're usually individuals or companies who care more about how much the property is worth, not so much your credit score.
Interesting.
So they're good for things like flipping houses or quick renovations.
Seed is key.
Yep. If you need that cash fast for a deal, hard money can make it happen. But
There's always a but, right?
of course, they
Yeah.
usually have higher interest rates than traditional loans, because the lender's taking on more risk.
Right, that makes sense. Okay, so what about private money loans? What are those all about?
They're kind of like hard money loans in that they don't come from a bank or anything. Usually, private money loans are from people you already know, family, friends, maybe a private investor, someone who believes in your project and trusts you to pay them back.
So it's more about personal connections and trust. That's an interesting angle. Any downsides there?
Well, even though these loans are more flexible with like interest rates and stuff, you got to be careful.
Right.
Mixing money and relationships can get messy.
For sure.
Make sure everything's crystal clear from the start, have a lawyer draw up a solid agreement. That way, no one gets confused or upset down the line.
Good advice. Don't want to ruin those relationships over a real estate deal. Okay, we've talked about the stability of those government-backed loans, but now we're getting adventurous with things like seller financing and private money. I'm starting to realize there really isn't a one-size-fits-all approach to financing, is there?
Nope, definitely not. It's all about finding what works for you, your situation, What are your goals? What kind of risk are you comfortable with? Those are all things to think about.
It's like we've got our real estate toolkit all laid out in front of us, and we need to pick the right tool for the job.
Yeah,
Right.
exactly.
Okay, so speaking of tools, we haven't talked about crowdfunding or REITs yet. These seem like ways to get into real estate without needing like a ton of cash up front or a giant loan.
You got it. These are perfect examples of how technology is changing the game, making real estate investing accessible to more people. Crowdfunding, for example, it's like a bunch of investors pooling their money together
Yeah.
to buy something big, like an apartment complex they couldn't afford on their own. Kind of like teamwork in real estate.
So instead of needing, say, $500,000 for a whole apartment building, you could invest a smaller amount with others and own a piece of it. That's pretty cool.
Exactly. It's way more accessible than it used to be, that's for sure. And then there are REITs, real estate investment trusts.
Okay, those have always sounded a little mysterious to me. What are those in a nutshell?
So imagine a company that owns like apartment buildings, shopping malls, office spaces, all that income-producing real estate, right? When you invest in a REIT, you're basically buying a tiny piece of that company and all the properties it owns.
So it's like you're dipping your toes into the world of commercial real estate without needing to buy a whole office building yourself. We've covered so much ground here. Conventional loans, seller financing, crowdfunding, REITs. Oh, and there's one more thing in our notes here. Something about using the equity in your home to invest in more real estate. That sounds almost too good to be true.
It might sound kind of crazy, but it's actually a common strategy for experienced investors. You see, when you're paying down your mortgage and your house is going up in value, you're building equity. Basically, it's how much of the house you actually own.
Right, right. Like how much of it is yours versus how much the bank still has a claim to.
Exactly. And you can use that equity to invest further. You can do a home equity loan or a cash out refinance.
So you're saying you could use the value of your house to buy another property.
Yep.
Wow, that's next level stuff.
Let's say your house is worth way more now than when you bought it. You could refinance, get a chunk of cash, and use that as a down payment on a rental property or something.
That's incredible. I'm realizing there are so many possibilities out there for people who are willing to learn and explore. We've really covered a lot today, from those basic mortgages all the way to these more creative strategies. It's clear that there's no one right way to finance a real estate deal.
That's for sure. The most important thing is to be strategic, right? Think about your own finances, your risk tolerance, what you're hoping to achieve in the long run.
And never hesitate to talk to the experts. Like our friends at Tantum, it would be a great help in figuring all this stuff out.
Absolutely. The more you know, the better off you'll be. Real estate can be intimidating, but it can also be incredibly rewarding.
Well said. Hopefully everyone listening feels empowered to explore their options, do their research, and ultimately reach their real estate goals. Whether it's that first home, an investment property, or even a whole portfolio of properties, it's all possible with the right tools and knowledge. So keep learning, keep asking questions, and keep that dream alive.